Hello everybody, Matt from Just Stack It here. So, not a lot of people are talking too much in the mainstream media about the long-term ramifications of a successful BRICS gold-backed international trade currency, which is what we're facing next month. So, I wanted to feed some information to our new AI friend, GPT, and see what it would speculate on the future with a successful launch of a gold-backed BRICS currency for trade over the period of the next 6 months, year, 5 years, 10 years, and see what its thoughts were. And it's pretty interesting, but not so different from what most of us, I think, would expect. So let's get into it. I'm going to show you what I did throughout this whole thing to get to our final predictions. So I fed it some information. I made sure I specified we're speculating on hypotheticals so that it knows. And even with that, it does know who the BRICS nations are. I had to give it some update as far as, how many countries are in it now and, the fact that they're launching this currency. So once I did that, it gave me this. And I'm not going to go over the first response because it was all pretty vague. So what I did there was, then I went in and asked it to give me more information and more details with theoretical spot prices. And it didn't really do it yet, but we'll get to that at the end. But for now, let's go over what it did return. Of course, as I have to state, bear in mind these are AI predictions and in no way have any basis in actual predictions. It's just to see what the AI thinks could happen. And it's very interesting. In the short term, 6 months, if a group of BRICS nations were to develop a gold-backed currency for international trade, it could potentially lead to increased demand for gold and silver. Investors might view these precious metals as a safe haven asset, given the uncertainties surrounding the new currency. This surge in demand could drive up the spot prices of gold and silver in the short term as the market participants seek alternative stores of value. Where have we heard a lot of these things before? It's basically just mirroring what most of us already know about precious metals. However, the magnitude of price increase would depend on various factors such as market sentiment, global economic conditions, and the actual implementation and acceptance of the new currency. 1 year. Within a year, the introduction of a gold-backed currency by the BRICS nations might continue to impact the precious metals market as the new currency gains recognition and usage in international trade. It could potentially erode the dominance of the US dollar and increase the appeal of gold and silver. This could result in sustained upward pressure of the spot prices of these metals. Additionally, central banks and institutional investors may allocate larger portions of their portfolios to precious metals as a hedge against currency fluctuations, further contributing to the price increase. 5 years. Over a 5-year period, the impact of a gold-backed currency on the price of gold and silver would depend on the success and stability of the new currency system. If the currency gains widespread adoption and credibility as an alternative reserve currency, it could significantly boost the demand for precious metals as a means of wealth preservation. The sustained demand could, coupled with potential macroeconomic uncertainties and geopolitical factors, could drive spot prices of gold and silver higher over the long term. However, it's worth noting that other factors such as technological advancements, mining supplies, and shifts in investor preferences could also influence the trajectory of these metals. Over the 10-year. In the 10-year time frame, the implications of gold-backed currency developed by the BRICS nations could have substantial consequences for the global economy and precious metals market. the reduced dependence on the US dollar as the primary reserve currency could lead to a fundamental shift in the financial landscape. As confidence in the new currency system grows, investors might view gold and silver as even more valuable, driving their spot prices higher over the long term. The potential for increased demand, scarcity of supply, and evolving global economic dynamics could contribute to a sustained and significant price increase for the precious metals. Now, that's pretty good and on par with most of what I think a lot of us are probably already thinking. The timeline could always be off, but that's kind of how a lot of us picture this going. I do like that it waited to really say that the dollar's in a lot of trouble till the 10-year mark. But with that being said, now I really wanted to get price points, and it really wasn't giving me those, if you noticed before. So I gave it some actual spot prices of generally where we're at about today, and then said, okay, what would spot prices be in these situations over this time frame? And again, these are predictions, not based on anything significantly tangible in the real world. Short term, 6 months. Silver could be at, I'm going to give you the synopsis, could be in the range of $28 to $35 per ounce in the 6-month period. Gold, similarly, could be in the range of $2,100 to $2,500 per ounce. That's within 6 months, according to AI. In 1 year, it's saying that silver could potentially have a spot price between $30 and $40 an ounce, and gold at $2,500 to $3,200 per ounce. In the 5-year term, it's saying that silver could have a spot price between $40 and $55 an ounce. Gold would be $3,200 to $4,500 per ounce. In the long term, 10 years, given a successful BRICS gold-backed currency, it is assuming that silver would have a spot price in between $55 and $75, and that gold would be sitting at a spot price of anywhere between $4,500 and $6,500 per ounce. That is 10 years, hypothetically, after the successful launch and implementation of a BRICS gold-backed currency, which is set to hit the market sometime next month. Now, most of us precious metals investors are not that worried, but I will say that changes your ideas about what your accumulation phase is going to look like once this gets implemented, and assuming it's going to be successful. Investors are going to feel the pressure of trying to move assets into things like precious metals as a hedge against the economic shift that's about to happen. Now, is this how it's going to go? Is the timeline 100% no? These are only speculations, but I think most of us stackers, and I'm sure a lot of financial analysts, kind of predict something like this happening. I wanted to throw it at AI so I could get a good synopsis of what it thought and try to get specific numbers, which we did here. So tell me your thoughts in the comments. What do you think about ChatGPT's scenario and predictions revolving around the BRICS gold-backed currency? I look forward to reading your comments and responding. I appreciate everyone for their time and attention. I will see you in the next video.